Welcome back. Retirement is the end goal for most workers, but as any financial advisor will tell you, the choices you make now before that stage in life will greatly determine your financial security when it's time to leave the workforce. In this week's Friday Focus on You, we'll get tips on planning for retirement and common mistakes to avoid. Welcome back, Martin Smith, President and Retirement Financial Advisor with Wealthcare Financial Group. Thanks for being here.
Thank you for having me again.
Friday to you.
Appreciate it.
So what's your number one tip as so many Americans are looking ahead to retirement? I think now with the economy rebounding, and we saw great jobs numbers this morning, and salaries are going higher, people are actually starting to think more about saving for retirement, putting more into their 401ks. What's your number one tip as we approach this issue?
Well, yes, they're definitely thinking about retiring and having a secure retirement. The first thing people want to consider is plan your retirement exit strategy. Plan it well. You don't want to retire too soon. If you retire too soon, then you may run out of money sooner than you like. The full retirement age is 66, so every year that you delay receiving Social Security, your benefits grow by about 80%. So if you just give it some time and don't retire too soon and have a good exit strategy, then you're likely to receive more income during your retirement.
I should note that our viewers watching live at this 10 o'clock hour are welcome to call and use your expertise. Questions for you as we talk about retirement and financial investments. As you talk about retiring too soon or not planning long enough into your financial future, I got advice just the other day from somebody who, this is their expertise, who said to me, and it really opened my mind, that many of us now will be retiring at 75 or even later. With the longevity of our lives and the financial issues at stake, that many of us will be working well past 65. Yeah. And for many senior citizens even today, that's a reality. And so careers maybe will shift, and the way we invest our money will change as well.
Yeah, that's the beauty of medical science. People are living longer. But the flip side of that is that you have to finance the cost of living longer. So if you're living into your 80s and 90s, then of course life gets more expensive. And of course the rate of inflation and purchasing power erosion will have a big impact on people's ability to finance their retirement long term. So another thing that people want to consider is do not abandon growth investing too early. A lot of people think that when you're retired, it's time to stop investing in individual equities like stocks, stock mutual funds, exchange traded funds, etc. You still want to be balanced. You want to have definitely some growth in your portfolio. You need growth to fuel future income, but don't abandon it too early, because that's going to help you as you get further down the line in your retirement years.
That seems to be when a young person, a young professional starts getting into a 401k policy, that aggressive growth option is what's on the table. So you're saying pursue that maybe a little bit longer into your career before shifting to more moderate growth?
Yes, I think so, because when a person retires, they're probably in their 60s roughly, right? So they're not on full Social Security at that point usually, and they haven't fully begun to withdraw from their 401k in some cases. So what tends to happen is that as the market is continuing to grow, people still want to be involved in the stock market to some degree. It's just you want to pull that back a little bit and not have as much of your portfolio exposed to growth in stocks, but you may still want to have an allocation reasonably. For example, 30% perhaps diversified growth equities, and then maybe 70% in fixed income. That's an allocation that was probably more likely suitable for a retiree than someone who's not retired yet.
What about debt? Because I think for many Americans, the idea of saving for retirement is such a far-off idea or fantasy when they still have piles of debt that they're paying off for student loans or a car payment or a home purchase. So what about debt as we look at retirement and we get into our older years?
I see a lot of that, and consider good debt and bad debt. Let's talk about the bad debt first. So bad debt is taking an expensive, for example, car note into retirement, or retiring and then buying a depreciating asset like a car, or maybe even a timeshare, for example. You don't want to do that when you're retired. You want to be working towards debt freedom before you get there, and especially when you're in retirement. Now, good debt is going to be your home. You're going to have your house when you retire, and hopefully if your house is paid off or if you have rental property, you get two benefits from rental property. You get income and appreciation. And that's a beautiful side of owning real estate if you're retired. And so if you have some real estate debt, just be careful, of course, but there's a benefit there. And then another source of good debt is college debt. But be careful, because a lot of parents are willing to dip into their 401k or their IRA or take out a home equity loan to fund the cost of college. There's scholarships and grants for that, but there's no scholarships and grants for retirement.
I quickly want to get to Marshall in Hyattsville, who has a question about drawing Social Security. Quickly, Marshall, we're running out of time. What's your question?
When's the best time to draw my Social Security? I'm 61 now.
Thank you for your question, Marshall. The best time to withdraw your Social Security, it really comes down to looking at what your income needs are. You can withdraw it now if you're retired. However, if you wait a few years, you may receive substantially more. So we have to first do, and I recommend all my clients do, a comprehensive financial plan and a retirement income analysis so that we can pinpoint the most optimum time to begin withdrawing Social Security.
We're out of time, but tell us quickly the website where people can learn more.
Yeah, so if you go to our website, it is WC, F as in Frank, I as in India, N as in Nancy, WCFinGroup.com, Wealthcare Financial Group. You can find our site, and we offer free financial plans available. Just give us a call. We're happy to help you.
That financial plan, as you said, can be critical. It's something that we don't want to think about because it makes us nervous, but it's important just to put it all out on the table and think about what's ahead of us. Martin, thanks so much for coming in. As usual, great insight. We're back with a programming note right after this.